Well, good afternoon or good evening, everyone. Good evening, good evening. Welcome to this evening's podcast. My name is David Etienne of Etienne Business Solutions, and we also have our recently established division, which is Etienne Strategic Management Consulting. So, coming to you this evening with this podcast, as I promised sometime earlier this week, that against the background of the recent announcement of the IRS, read the 20,000 plus rejection letters that were issued related to the ERTC credit. I know it has caused quite a bit of anxiety, and we have been receiving, calls and comments, and that tells me that there's a level of uncertainty, anxiety that's hanging, which evoke the need for us to provide some additional information, to give you some insight as to what is happening, how to navigate, what to expect. And so this evening we're going to be moving into our ERTC podcast. This evening's podcast is going to be an overview, because the intention is to give you a comprehensive or a bird's eye view, of what is happening, what does this mean, the potential implications, and by so doing, hopefully you will be able to determine if and what components apply to you, and then be able to take whatever necessary action. Okay. In the spirit of clarity, I've decided to prepare just a simple set of slides that I'll project on screen, so that as we go through the various components and I go through the explanations, then you'll be able to see and to more identify what we're talking about, and then, as I said earlier, to see just how they apply to you. So let's jump to a slide right away and get moving. Good. Now, I purposely label the podcast ERTC, the aftermath. Why? Because a couple of months ago, for some of us, it was all excitement and smiles and joy, because you received an opportunity to get some relief, well-deserved, well-needed relief through this ERTC provision. And so a number of persons were able to benefit, and that helped you with conducting your business, continuing to do what you need to do. So it really injected quite a bit of working capital into your operation, and therefore it was all good. We come to now, and we hear the announcement by the IRS about these 20,000 and more to come rejections that were issued, and so that has now caused quite a bit of anxiety. These rejections, clearly indicated by the IRS, were prompted by the extent to which, or the large extent to which, dubious, false, you name it, applications were submitted, and for which funds were disbursed. And so with that realization, the IRS is saying, okay, need to take some steps. So a lot of rejections went out. As a matter of fact, the IRS has even stopped processing applications for the last quarter here, as it goes through its more in-depth review, analysis, you name it, of these applications. So this evening we're going to quickly look at some of the components that I think you're going to find to be very important. But most importantly, this podcast is meant for you to not only be aware of what is what, but to see, as a beneficiary of the ERTC credit, whether or not any of these things relate to you, or there's a possibility that you could fall in any of these categories, and that will help you to be able to say, okay, I need to take some action, or I need to expect A, B, or C. So let's jump right in. As far as the qualifiers are concerned, once you had submitted an ERTC application, you more or less would have come in contact with what were the qualifiers. So just quickly, briefly, the qualifications fell under two broad headings. Of course, there are a lot of details to that. We don't need to go into that this evening. But the categories were: one, if your business was shut down by a government-ordered shutdown, okay? Not just you hearing something on the news or someone say, okay, or there's a suggestion by whether local authorities that so and so should be done. No, it has to do with a government mandated, a clear instruction that you need to shut down. If you fall in that category, then that could be under one umbrella under which you qualify for ERTC. The other is, even if you did not have a shutdown order and you were in, you continued operating, the question is whether or not your revenue, your income stream, has significantly reduced. And to determine that, 2019 was used as the anchor or the base year, and so a comparison will be made between 2020 and 2019 to determine if there was and to what extent you had a fall in revenue. And for 2021, the same comparison would be made between revenues in 2021 compared to 2019 to determine the fall. Of course, for 2020, it was comparing the year 2020 with the year 2019, and the fall had to be 50% or more. For 2021 comparison with 2019, the comparison, the fall in revenue just had to be 20% or so or more, okay? And in that case, you will be able to qualify. So, of course, much more detail, but those were the two headings under which the qualifiers would occur. So, individuals determined that he or she qualified for this thing. And so you move to the preparation stage. Now, on the preparation of the RTC, there were three scenarios. Three. One, the ERTC application may have been self-prepared. So you as a business owner, you're comfortable, you think you have the competence, you understand the rules, the regulations, the requirements, and you say, hey, I can handle this. And so you went ahead, prepared your own ERTC application, submitted your stuff, good to go. Others decided, I think I need to use a third party to prepare. Now, third party could fall under one of two headings. One I call professionally prepared, a CPA, an accountant, a tax person, EA, a lawyer, even someone who's just specialized, like some of these firms that specialize in ERTC, okay? I group all those under professionally prepared. Those individuals know what they're about, they know the rules, they know the provisions, they know the requirements. On the third party prepared, there's what I refer to as otherwise prepared. And I use this otherwise label as a catch-all. So once you are not a professional preparer, I put those persons in the otherwise prepared. Not in any derogatory way, but just to say that you, in this category, you would have persons who are competent, just that they are not professionals in the sense of being qualified in the business, but they are competent. And then in that otherwise prepared, you also have individuals who just come on the scene because there's an opportunity to make some good money, and so we're presenting ourselves there as ERTC preparers, and we're going to town. And that is where you could find some gray areas popping up. But either case, self-prepared, third-party prepared, where on the third party it could be professionally prepared or prepared by some other person, put into the classification of otherwise prepared. Good. Let us now look at some of the potential issues that could arise. that a business person may have to face, or things that could, conditions that could cause issues to arise. And I say potential because that's really what it is, okay? These are just some of the vast possibilities. They may or may not occur. They may occur but does not apply to you. It's just for you to listen, understand, and ascertain whether or not you may fall in that category. First, I have on screen the potential issues. And I'm looking at the first. A, not qualified based on either closed down or fall in revenue. The truth is, a number of businesses have filed, submitted, and received money under the RTC that do not qualify either under the shutdown, government mandated shutdown, or by virtue of fall in revenue with those comparisons that I mentioned earlier. But they decided we're going to go just the same. That could create an issue. B, not qualifying for all the quarters that was claimed. So it's possible that a business could have qualified for second and third quarter of 2021, but not first quarter of 2021 by virtue of the comparison. But maybe the filing was for all 3 quarters of 2021. So you can understand now that any sort of review and investigation would potentially identify that yes, the claim was for 3 quarters of 2021. You only qualified for 2 quarters of 2021 and therefore there's an issue. C, businesses had in the past received PPP loans. We call it loan at the time, but because it was subsequently forgiven, it ended up not being a loan, but almost like, well, a grant. Okay? You did not have to repay it once it was forgiven. The truth, however, is that a condition under which it was forgiven was that you should clearly demonstrate, clearly provide information to say that it was used as designated for payroll expenses, and to also specify the period of payroll payments that the PPP covered. So back to the ERTC, yes, using 2021 again, you do your thing and you decide that yes, I qualify for all 3 quarters. But bear in mind that if you had used PPP money to pay payroll expenses for the first quarter of 2021, it means therefore you have already benefited through this PPP for quarter 1 of 2021. So when you prepare your ERTC for the first, second, and third quarter of 2021, you have to now, as it were, back out, remove any benefit for quarter 1, because quarter 1 was already taken care of. You already benefited for quarter 1 under the PPP. If you do not make this adjustment, then it means that you would have been double benefiting, double dipping, whatever we call it, okay? So that's another potential issue if the submission had not taken that into consideration, if it applied. Next component, and this one, that will be an issue possibly down the road, but it's a potential issue. And unfortunately, a number of preparers, especially non-professional preparers, either are not aware or they couldn't care less, I don't know, but they having prepared the ERTC application, they fail to move to the next step, which is an amendment of the business tax returns. So quickly, why amend? Let us say that on your business tax returns for 2021, you reported $100,000 worth of payroll expenses. You're able to write off $100,000 payroll costs on your tax returns. by writing off 100,000 payroll expense on your tax returns, it reduces your profitable your bottom line profit. Okay, bottom line profit. Good. Now that you apply and you receive ERTC benefits, let us say that you received 40,000. That's for information. 40,000 for the 2021 period. It means that you have to go back to your 2021 business tax returns and amend. Because you already claim 100,000 write-off. Now you get 40,000 ERTC benefit. You now need to go back and amend the business tax returns to reduce that 100,000 down to 60,000 by removing that 40,000 ERTC benefit. If you fail to do that, then of course you would have again double benefited. Now, if the ERTC was self-prepared, meaning by the business owner, he or she may just not be aware that this is necessary. If it was prepared by a third party and that third party is a professional, 9 times out of 10, most likely that person will know that this additional step is necessary. Whether or not it's taken is questionable, but that person more or less would be aware. If the third party is an individual who falls into the otherwise prepared category, now this is where we could have an issue. Because, sad to say, a lot of the preparers who fall in the otherwise category, they pop up out of the blue just to be able to benefit from this opportunity of preparing ERTC application for a fee. Once they do that, they disappear from the scene. To facilitate this behavior, a lot of them even refuse to sign the amended 941s, to amend the tax returns to make the ERTC application, because their position is that once prepared and submitted, I am done with that. Nothing to do with me. So even if such a person is knowledgeable and aware that the amendment ought to be done to the business tax returns, quite often they're not interested into getting into that kind of thing. On the other hand, too, or in addition to that, some of them, because they just came about to prepare ERTC, get their money and go, they're not knowledgeable of the process of preparing an amended business tax returns. Okay, so even if they would be willing to assist, they do not have that knowledge because that's not what they're about. So that again, or the non-amendment of the business tax returns could be another potential issue. That flows now to E, which is not amending the individual tax returns. Very simple scenario, especially like when you have S corporations and partnerships. Those entity types, let's call it that, they are referred to as pass-through entities. So whatever profits they generate on that tax returns, that final figure, which is the profit, is transferred from the business tax returns onto the individual tax returns, whether it be the shareholders of the S Corp or the partners of the partnership. And that transfer is done via a form called a K1. Essentially, all of those profits are taken from the business tax return, S Corp or partnership, and moved to the individual tax return. That is where they are processed, they are taxed. So it means, again, if you had a K1 that was used in your personal tax returns when the initial business return was prepared in 2021, you will then agree that any amendment of that business tax returns by amending the payroll expense will have the effect of changing the bottom profit or loss, which will have the effect of changing the figure that is reflected on the K1 and that is taken to the personal. So once you have an amendment of the business, the K1 has changed, the personal tax returns now needs to be changed. So hence we have a need for an amended business tax returns and an amended individual tax returns. Remember I said at the outset, It may or it may not apply in your case. We're just trying to explore all the potential issues that could arise from what we're dealing with here. So very, very important to know that. Good. Moving right along. Now, let's look at the potential, and I keep using this word potential, impact based on what is now happening. So a lot of rejection letters have gone out. We expect a lot more to go out. We expect a lot of actions to take place. Now, how these actions, initiatives impact you, the business person, as far as your ERTC is concerned, is going to be directly dependent on just where in the process you are. And so we try to sort of outline it. So first, it is possible that you have submitted an application, it is still in the processing phase, but for one reason or the next, the IRS decide that we want some additional information just to clarify something, just to explain whatever. It is within their right to do that. So it is possible that that could be a request coming through to you. Now, going back, if the ERTC was self-prepared, you did it yourself, then hopefully you would have based your submission on credible, available information and documentation. And so when information request comes through from the IRS, not a big thing. No brainer for you. You reach for your information, you reach for your documentation, you submit, good to go. That's one potential play that could, be the resulting from a query. Now, hopefully not, but if you were a self-preparer, a business person who did your own thing, but you did not base your preparation and submission on credible, real information, then you could have a problem responding to a request for additional information or documentation. If this request was prepared by a third party, again, the implication will depend on what two subcategories this third party fall. So let's look at it again. If that third party is a professional in the true professional way, such person would only prepare and submit an application on your behalf based on available, credible information, documentation. So if a request comes for additional information and your thing was prepared by a professional third party, it should be a no-brainer. Either the person already have it within the, among their files to submit, or they reach out to you and say, okay, let us have this, because they have already confirmed that it is available. Not a big thing. If the third party preparer falls in the otherwise prepared category, again, it could be a credible, upfront other preparer, in which case you may find that this person is able to respond accordingly. Unfortunately, again, a preparer falling in the otherwise prepared category could be a person who is just interested in just doing a thing and exiting the scene. In which case, such a person is not interested. They have let me rephrase that, because if you went into an arrangement where this person is going to be paid a percentage of the fee of the credit that you're going to receive, then yes, they still have an interest in ensuring that you receive the funds, because that's how they're going to get paid. If it's on a situation where they tell you it's a fee of $10 and you pay upfront, then it is likely that okay, I've done my work, I've collected my fee, I'm not interested in doing anything else. And so you could find that you are left with the responsibility of trying to fudge through and provide the information requested. So that is one case where your application is in the processing stage and additional information is requested. It is possible. So this is just where, so this was information request. Now we come to what is happening now, which are the thousands and thousands of rejections going out. If if your application is in process and you are one who received a rejection letter, because you have not yet received money, it means, worst case scenario, if your application is rejected outright, then it is what it is. Okay? Nothing is lost. You cannot lose what you never had. So you applied hoping to receive, it is rejected for good reasons, and so basically that's it. No further consideration. That's full rejection, still in process, no big thing. Now, that rejection, it is possible, could be not necessarily a full rejection, but to say, okay, we're reviewing your thing, however, let's go back to the 3 quarters of 2021. It is seen where something might not be too kosher with whatever, and so it is rejected pending you satisfying some requirement. Then what we call that is maybe a rejection, a partial rejection, or a rejection that can be corrected based on what is stipulated in as to the reasons for rejection. We go back to the self-prepared as opposed to other third-party prepared. If you were the one who prepared it, then hopefully you can do whatever corrective, take whatever corrective action. If it was a third party and it's a professional, good to go. If it was another person, we hope that they will be able to deliver. Either way. So that is when your application is in process. Here's where we have the biggest headache. If you get that, well, even before I touch that, so that rejection would be the IRS decide we're not going forward with this application. No, sir. Throwing it out, that's it. If, on the other hand, the IRS has already processed and dispersed funds to you, then I am the one, not the IRS language, I'm the one who is now introducing the word revocation. Because as you clearly understand, as good English students you are, that rejection is a case of received, don't want, get rid of. Revocation is received, process, do whatever, disburse funds, then after the fact decide to rescind or to overturn the action that was taken. The action in this case is the fact that it was processed, money was sent to you, and everything seemed to be rosy and dandy. And for whatever reason, the IRS in reviewing, in whatever, decide, something not right. So we're going to revoke. We're going to overturn. What does that mean for you? You already received your funds. You already spend it in your business. You already do whatever. So a revocation now is where it's going to be okay. Because revocation here means we're going to have to find money to pay back. And on the hallmark of any payback to the IRS is always a featuring of 2 little men, interest, penalty. So you have the sum that you got for the ERTC credit, and then there could be an element of interest accrued between that time and now that you're asked to return money, and some amount of penalty for the fact that, something went awry. That is the revocation. It is reasonable to expect that for those ERTC applications that were processed, for which monies were disbursed, that did not have any revocation applied to them, could still be subjected to a review and audit, because it is within the purview of the IRS. Anything, any submission, any filing that is done into the IRS is subject to a review and audit, whatever, at their pleasure. At their pleasure. They may not. So the bottom line is that you may find that your submission was kosher, it was processed, you received your funds, there was no rejection, there was no revocation, but by some random selection, your application could be one selected for a review, for some investigation. It's a normal thing. It is done with tax returns. As I said before, it can be done with just about any submission that goes into the IRS. Now, if that is the case, we come back to the three scenario. Okay? What was the ERTC self-prepared? If the ERTC was self-prepared, the question is, are you comfortable? Are you able to represent yourself before the IRS to answer to questions, to address issues that arise? If you're not comfortable, or you just do not want to have to deal with it, you may have to consider then engaging the services of someone who can represent you, who can speak on your behalf, who is authorized to speak on your behalf before the IRS. Okay? That's one thing. That is if it was self-prepared. If it was professionally prepared, there's one of two scenarios. This person, although a professional and so is very competent in preparing the ERTC application, may not be authorized to represent you before the IRS. Further to that, if that third party fell or falls into the other preparer category, otherwise prepared categories, it is highly possible that that person will not have the know-how, will not have the interest, will not have the authorization to be able to speak on your behalf before the IRS. So it means, therefore, you still have to now go back and seek professional help if you do not want to do it yourself. And even when it comes to professional preparers of the ERTC, you can have two possible arrangements where the understanding with this professional is that he or she, in addition to preparing and submitting the ERTC application, he or she is also responsible to respond to speak on your behalf on any matter having to do with the ERTC. If that is your understanding, then yes, it will be taken care of. If that is not part of the arrangement and the agreement was just to prepare, then even though this professional is able, has a competence, and is permitted to represent you, because it was not part of the original arrangement, you may find that it is treated as a related but separate service for which you then will have to pay an additional fee, which is really for IRS representation. Okay? Representation. Good. Now, having looked at all of these things, I try to capture as broad as possible the different possible scenarios. You, listening to me, looking at the slides, can ascertain what may or may not apply to you. So we come now to number 5 bullet on my screen. And I call it self-reporting - post-reflection. Meaning that now that you are empowered with this kind of information, you should be in a position to reflect. Pull out your copy of your ERTC submission, and let me quickly say, it is true, sad, but it's true. A lot of times business owners or individuals have professionals otherwise prepare documentation and submit to the IRS on their behalf without providing them with a full copy, full set of those documentation. You must always have in your possession a full set of the documents that was submitted to any authority on your behalf by a third party. Okay? Because at the end of the day, you are responsible. So back to what I was saying. Hopefully, you would have had a full set, a copy of the ERTC submission, so you can now go back and look to see if anything that we mentioned here would impact or would apply to you. Then you can say, okay, maybe. Now, if that is the case, you want to address bullet 5, number 5, self-reporting post-reflection. What I like about the IRS is that a lot of people don't realize is that the IRS is strict on regulation, okay, and compliance. But at the same time, in most, if not all instances or cases, the IRS always makes some provision to make life a little easier, to give you an opportunity, even if not to make 100% right, but to take some action to introduce some level of remedy. Here we go. The IRS is saying that they're rolling out, and they may have already done that, a facilitation for self-reporting. So once you reflect on your submission, you can say, wow, I think issue A, potential issue B or C may apply to me. And so I think I just want to look back at my thing, look whatever, see if I really qualified, what quarters I qualified for, look at how the computation was done to determine what is the ERTC qualified payroll expense, etc. Just to satisfy yourself that, okay, none of those apply to me. But if any should apply to you, you're given the opportunity then to self-report, to call up the IRS and say, listen, I want to address it. Now, if your application is still in the processing phase, then life is easy. If you think it was a total no-no, should never have gone, you call and you say, I am withdrawing this application. You can't give the reason, but you're in the clear. If you already received funds disbursed to you, but realize that, oh boy, I should have really only gotten 2 quarters, but I got money for 3, then yes, it is still beneficial to you to be proactive and to call and report to say, on reviewing my stuff, this is what I'm seeing, and I want to bring it to your attention, and based on my understanding, there may be some benefit to that, especially in terms of the penalty component. Mark you, no matter what, you have to pay back the money that you got to which you were not entitled. But when it comes to the penalty aspect of it, there may be some, I won't call it a rebate, but there may be some leniency as far as penalties are concerned if you go ahead and self-report. But as you can understand, if you already received money dispersed to you, then hey, it is definitely a case where some serious discussion will have to take place. All right, so that basically is a broad I would call it the broad categories or the broad issues that ought to be considered in terms of this, because I know it's a time where a lot of businesses are, business owners are sort of panicking, even for those of you who had your submission prepared by a third party, and maybe more than likely a professional, competent person, you cannot help but wonder, I wonder if everything is okay with my submission, because letters are going out, maybe my colleague who run the business down the road received a letter, blah 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 blah, and therefore you sort of getting a little antsy, anxious, nervous. And so I thought, let me share this with you to help you to look to see where you are. Good. If professionally prepared and you receive a letter, or you need to have any sort of review, then hopefully the professional preparer will be able to help you. We present this podcast to give you an overview and insight, but I realize that there will be individuals who, having joined me this afternoon, would wish to have some specific looking into or review of your podcast submission. So you pull your copy, you're looking at it, you're not too sure if everything is kosher, and so we invite you to, if you're so interested, to just jump online to our website, to www.myebsolutions.com, right on screen, and we also, and I'm going to put up for you here a QR code. Let me just go to it and see. Here we are, and I put it right there. Good. So either on our website, or you can scan the QR code, and there you can actually book a consultation. And if you notice from the slide, for that consultation, we can review the submission that was made on your behalf, just to give you that peace of mind, or to help point out to you the areas that could potentially be an issue. We also think that for those who already submitted, already got a refund, but you're a little concerned that one of those letters may be forthcoming to you, you can also, seek our intervention. And then there are those who are still yet to apply. And I think at this point you'd want to be much more careful about your application. Know that you see how things are evolving. Again, you can jump online to our website, scan the code, and set up your consultation for us to take a look and to be able to guide you and to walk you through so we can ensure that a correct and credible ERTC application goes forward. Remember now, for those businesses who are still thinking of claiming ERTC for the year 2020, I put on screen there you have until April of next year to submit applications for the 2020 period. For 2021, you have until 2025, but just bear that in mind. Okay, so that's it. Now, this was an overview to give you a broad picture. Apart from individuals having specific concerns about their individual applications, there are going to be in the coming weeks and months additional information rolling out from the IRS as to this whole revocation rejection issue. Okay, so from time to time we'll be preparing additional podcasts that will give updates, tell you what are the changes in the rules, any new pronouncement, any new announcements. We also intend to start to produce some podcasts that give actual illustrations and demonstrations of the computations of the various parts of your ERTC application so that it can help you to navigate them. And in addition to that, when you receive such a letter, depending on what it is saying, always more often than not it's a standard letter, but we can still assist you in looking at what needs to be done. So what you can do if you're interested in getting those additional detailed information that will guide you step by step with worked examples, illustrations, demonstrations, you can also go to our website or scan our QR code and subscribe. Okay, gonna subscribe and by subscribing you will then be able to tap into all those additional podcasts that will go into a lot more details, that will give you specific answers to questions asked, that will provide you with definite illustrations as to how to go step by step in terms of addressing this whole ERTC issue. In addition to that, that subscription will tap you into a lot of financial management, tax planning, personal financial planning information. And not just general information, but specific information that shows you in terms of computation, templates, things to consider, how to develop your structure in terms of your financial planning step by step, how to look at strategically managing your business even as a small business operator. Okay, so I invite you again to jump online, go to our website www.myebsolutions.com, scan our code to set up your consultation appointment, so to say, your engagement, where we can do a one-to-one with you. In addition to that, invite you to subscribe so that you then will always be kept informed on a number of things to do with ERTC, but more importantly on all the different aspects of both your business management and your personal financial management. Okay, so that's it for now. Now, although on screen is not my number, some of you may wish to call. So the number is 678-400-2449. 678-400-2449. And I see it is panning at the bottom of the screen. So that's all it is for today. Hope you got quite a bit from this. and that it will help you to really navigate this thing. Don't panic, just be proactive, take action, and God bless. I hope you have a wonderful rest of the week, although it's almost ended. And if we do not speak again or see each other, all the best for the holidays. Be safe, and all the best to you and yours. David saying bye for now.